Welcome to the deep dive. Today, we're really getting into the weeds with GTPL Hathway Ltd. We're looking at their latest quarter, Q1 FY26, the period ending June 30th, 2025.
That's right. Lots to unpack.
Exactly. We've got the official filings, investor presentations, the media release, the whole lot. And our goal here, it isn't just to read out numbers.
No, definitely no.
We want to pull out what actually matters, find the surprises, and figure out what it means for GTPL and, well, the bigger picture in India's digital space. So let's unpack this.
Sounds good. Where do you want to start?
Let's start big picture.
Right.
The financials for the quarter ended June 30th. What's the overall health look like at the consolidated level, group performance first?
Okay, consolidated total revenue came in at $9,091 million. Now that's up a solid 7% year on year.
7%. Okay.
And but 1% up from the previous quarter.
Yeah.
Then you have EBITDA, that's their operating profit, basically $1,123 million. Gives you a 12.4% EBITDA margin.
Right. EBITDA, always a Q1 to watch for core performance.
Exactly. And their operating EBITDA margin was 22%. Finally, the bottom line, profit after tax, or PP, that was $105 million for the group.
Okay. That's 7% year-on-year growth. It sounds decent, but in this market, how significant is that really? Are they grabbing share or just treading water?
Well, look, in a market this competitive, 7% year-on-year is actually quite strong. It's not just keeping pace. It signals, some effective strategy at play. Consistent upward trend.
Right.
The quarter-on-quarter is smaller, sure, just 1%, but still positive momentum. And if you look at the standalone numbers, just for the parent company, GTPL Hathway.
Yeah, how does that compare?
Revenue there was $5,990 million. That's up 10% year-on-year, 5% quarter-on-quarter, so a bit stronger there. Standalone EBITDA, $592 million, margin about 9.9%. And PAT was $56 million.
Okay.
But here's what's really interesting, I think. Their consistency. They've been cash positive and PAT positive for 8 years straight.
8 years, that's stability.
It is. And consistent dividends, too, 20% for FY25. It just reinforces this picture of a financially stable company in a pretty volatile sector.
Okay, that financial base seems solid, but the real story is often on the ground. So let's dig into the core businesses. How are cable TV and broadband actually doing?
Right, let's break it down. Digital cable TV first. As of June 30th, they had 9.6 million active subscribers.
9.6 million, wow.
Yeah, and 8.9 million of those are paying subscribers. So they're holding onto their base pretty well. Subscription revenue from cable, $3,018 million for the quarter.
And they're still market leaders?
Yep, number one MSO, that's multi-system operator in India overall and in Gujarat. Number two in West Bengal. Their footprint is huge, 1,500 plus towns, 26 states, reaching over 12 million households.
That's massive reach.
It really is. And they're innovating too. Things like the GTPL Buzz app, it's got live TV, distro TV, even cloud gaming. Then there's GTPL Genie, bundling cable with OTT services.
Smart bundling.
Exactly. And they did an industry first launching live TV on Samsung connected TVs using something called TV Key Cloud. Plus, they've got an AI chatbot, GVA, for customer service, trying to streamline things.
Okay. Sounds like they're definitely not sitting still on the cable TV side. Let's switch gears then. What about broadband, the internet services piece?
Okay, broadband. Active subscribers hit 1.05 million. That's up 20,000 over the year.
So slower growth there compared to cable subs?
Year-on-year subscriber growth, yes, a bit slower. Broadband revenue was $1,359 million, up just 1% year-on-year. But here's where it gets interesting.
Okay.
Their home pass, the potential homes they could connect, is now 5.95 million. They added 50,000 potential connections in the year. And crucially, about 75% of that whole base is ready for a fiber to the home. FTTX.
Ah, FTTX. That's the key for speed, right?
Absolutely. That's the future-proofing part.
Yep.
Now, ARPU, average revenue per user, is $465 a month. That's up 5 from last year. Not huge, but steady.
Okay.
But this is the number that jumps out. Average data consumption per user, 410 gigabytes per month.
410 gigabytes per user.
Oh, per user per month. That's up a massive 17% year on year.
Wow. So people are really using the service they have much more heavily.
Exactly. It shows huge engagement. People aren't just signed up. They're hammering that connection. And GTPL is still a leading private wireline provider, number one in their home turf of Gujarat.
Right. So if you put it all together, stable subs, but that massive jump in data use, what does that signal for someone watching the industry or maybe thinking about their services?
It means, despite all the competition, they're keeping customers. And those customers are finding more and more value, especially on the broadband side. That usage stat is key.
That sense.
Strategically, it looks like they're leaning more into B2B, business-to-business contracts, which are usually stickier.
Mm.
They're also pushing into rural Gujarat's big potential there.
Untapped market.
Definitely. And they're trying to leverage that huge 12 million cable TV base, trying to convert them to broadband customers too, plus improving content, especially OTT bundles. And underpinning all of this is their massive fiber network, over 100,000 kilometers owned, plus leased lines. That's the backbone for that FTTX push.
Okay, operations look pretty resilient. Strategies seem clear. But GTPL operates in India. There's always the regulatory side of things, right? And leadership, what's happening on that front? That's often the other side of the coin.
Yeah, and there's a big other side of the coin here. This really brings up how, external factors can just loom over a company. GTPL is facing some very significant contingent liabilities from the Department of Telecoms, the DOT.
Contingent liabilities meaning money they might owe.
Exactly. Might owe. And it's over $13 billion in total across the group. For the main company, GTPL Hathway, the demand is 9,754 million, almost 10 billion rupees.
Wow. What's that based on?
It's complicated, but it stems from the DOT trying to apply the adjusted gross revenue, or AGR, calculation, which was originally for telcos, to GTPL's cable TV revenue. Basically, the government wants a slice of revenue streams that GTPL argues aren't part of their telecom license.
Okay, that sounds like a major fight. Is that the only one?
No, there's more.
Hmm.
GTPL Broadband, the subsidiary, faces a demand of over $3.3 billion for license fees just on its internet services. And another step-down subsidiary has a similar, smaller demand of about $231 million.
So billions potentially on the line. How are they defending against this?
They seem pretty confident, actually. They're pointing to Supreme Court clarifications, letters from the Information and Broadcasting Ministry saying cable TV revenues shouldn't be clubbed with ISP revenue. And crucially, the Telecom Dispute Tribunal, TDSAT, has stayed these kinds of demands before and even thrown out similar ones for other companies.
Right, so legal precedent might be on their side.
That's what they argue, based on legal advice, which is why they've listed these as contingent liabilities potential, but not certain. They haven't actually set aside money in their accounts for it.
That's a bold stance, given the numbers involved.
It is. It really highlights just how complex and, frankly, uncertain the regulatory landscape can be for these infrastructure players in India.
It certainly does. So that's a huge potential risk hanging out there. Even if they're confident, what if? What if they do end up having to pay some or all of that? Could that seriously dent their growth plans?
Look, it's a massive sum. While they've shown resilience, being cash positive for years, having to suddenly provision or pay out billions would absolutely put a strain on things. It could impact their ability to invest as aggressively, maybe slow down acquisitions or network expansion.
So a significant shadow.
Definitely a significant shadow. But again, their public stance not making that provision shows how strongly they believe in their legal case. It's a high-stakes waiting game, really.
Okay. And who's leading the company through all this? Any news on the leadership front from the board meeting?
Yes, there was. The board reappointed Mr. Anirudh Jadeja as managing director for another 3 years. That starts from December 2025, but needs shareholder approval, standard stuff.
Jadeja, he's been there a while, hasn't he?
Oh, yeah. Over 30 years in the cable and broadcasting sector. Been with GTPL basically since the beginning. He was named Business Leader of the Year back in 2021. And he's also president of HCF, the main industry body for digital cable guys.
So continuity at the top. Experienced hand.
Exactly. The company also made sure to note he's not related to other directors and isn't barred from holding office or anything like that. It signals stability, experience navigating these choppy waters.
Right. And Mr. Jadeja had some comments in the press release emphasizing resilience and looking ahead. How does that translate into, concrete plans for the next year or so?
Well, his comments really echo the strategy we talked about. He stressed sustaining the subscriber bases, cable and broadband, which, as we said, is key in this market. He mentioned advancing their TV distribution capabilities, suggesting more tech investment.
So doubling down on the core.
Yeah, sustainable growth, digital transformation, customer value. It means practically more infrastructure upgrades, probably pushing those FTTX conversions hard, more consumer-focused stuff like the apps and bundles. It's about leveraging their existing scale while trying to innovate where they can. That dual-play strategy seems central.
Okay, that makes sense. So looking even further ahead now, beyond the next year, what about the wider industry trends in India? How's GTPL positioned to ride those waves?
The bigger picture in India is, well, it's still one of huge potential, particularly for broadband. Think about it. Maybe 180 million households could have TV. GTPL has under 10 million. Maybe 150 million could have broadband. GTPL has just over 1 million wireline subs.
So tons of room to grow.
It's exactly. Fixed broadband penetration in India is still really low, around 13.6% as of May 2025, according to TRI. Compare that to developed countries. It's tiny.
Right.
And the projections show strong growth. The overall wired broadband market is expected to grow at like 15.4% CKGR compound annual growth rate through FY28.
KGR, just the average annual growth rate, right?
Yep, basically. And the fiber to the home part, the FTTX, is projected to grow even faster, maybe 17.6% CAGR. Plus, you're seeing industry consolidation, fewer MSOs now than a few years ago.
Down from 1,700 to about 840.
Something like that,
Yeah.
which generally helps the bigger organized players like GTPL. They can potentially scoop up smaller operators.
So a growing market and consolidation favoring the big guys. How specifically does GTPL plan to grab more of that pie beyond just organic customer signups?
Well, inorganic acquisitions are definitely on their radar, buying smaller players to grow faster. That's one angle.
Makes sense in a consolidating market.
Then there's content, making sure they have a deep catalog, especially regional stuff, which is super important in India. Making services easier to use is another focus. Online payments, more customer service channels like WhatsApp, the app features.
Reducing friction.
Exactly. And that push into rural India we mentioned, chasing demand there.
Yeah.
And generally just trying to be more consumer-centric, bundling smartly, promoting self-service, and really pushing that FTTX capability they've been building out.
Okay, this has been a really thorough look under the hood at GTPL Hathway's Q1. So just to quickly recap for you listening, we've seen steady financials, pretty resilient performance in both cable TV and broadband, especially that big jump in data usage, but also these very significant legal overhangs from the DOT that are still playing out.
Absolutely. And underlying it all is this clear strategy focused on growth, digital transformation, and really trying to tap into India's huge potential, especially in broadband, both in cities and rural areas, all while managing those big regulatory question marks.
Right. Which leaves us with a final thought. We see this clear trend, right? Digital consumption is only going up. How we get content is constantly changing. So how might the eventual resolution of these massive regulatory disputes, whichever way they go, how might that ultimately reshape the whole landscape for digital entertainment and internet access in India? Not just for GTPL, but for everyone, something to definitely keep an eye on, isn't it?